The Federal Reserve slashes its interest rate. Let's have a look. Good morning, everyone. Florian Heise here, and welcome to another episode of HeiseSays. We're starting the week with some breaking news. The US Federal Reserve has slashed their cash rate by 100 points. 1% in one move. Insane. What is this going to do for the market? What will the reactions be? It's going to be interesting. I'm watching a few things right now to see what's going on. The Australian dollar, it looks like it's jumped up to 62 cents. What can Australia do in response? New Zealand just cut by 75 basis points. It's definitely going to be an interesting times. Now, before we go through this article from the Washington Post, let's jump over here to Trading Economics and we'll have a look. Just look at that graph, guys. Look at that cut. Look at that cut. It's virtually at zero. The Federal Reserve lowered the target rate for its federal fund rate by 100 basis points to 0.25% and launched a massive $700 billion quantitative easing program during an emergency move on March 15 to protect the US economy from the effects of the illness. Now, you've got to understand, guys, this is on top of the repo intervention, where they're going in, what was it, $1.5 trillion as well in the repo sector, even though over a few days, even though all of it isn't being picked up. Now they're going to do QE. Printing money. Printing money. What will this do for confidence in the US? In the dollar? We'll have to see, guys. How will it respond? We've got the NASDAQ here. This is at 15-minute intervals. We'll have to see if it responds positively. If it still keeps crashing, the S&P 500, you can see here it's jumping up and down. I've been looking at the great crash of the Great Depression and just all the interventions that were done by bankers and business people to try and prop up the market, to restore confidence. And it would lift it up. And then confidence would erode and it would slowly go down. And then intervene again, lift it up. And then it would erode until eventually it got to the point where it just crashed over a year, just siphoned off over a time. So we'll have to see what happens, guys, because, this is drastic. The outbreak has harmed communities and disrupted economic activity in many countries, including the US. Global financial conditions have also been significantly affected. Available economic data shows that the US came into this challenging period on a strong footing. We're hearing that all the time, aren't we? To support the smooth functioning of markets for Treasury security and agency mortgage-backed securities that are central to the flow of credit to households and businesses over coming months, the committee will increase its holding of Treasury securities by at least $500 billion and its holdings of mortgage-backed securities by at least $200 billion, the Fed said. So do you think this will be enough to restore confidence? There you go, guys. Look at that. That's earlier than was anticipated. So the consensus in the forecast was at 0.5, that they cut 75 basis points. But they've cut one. They've gone to 0.25. What do you think Australia will do? What will our cash rate be next month, guys? Will they go straight to zero? Will it even make any difference at all to consumer confidence? People aren't even going out and shopping. They're just hoarding up on stuff and food. People are worried. Here's the thing. I honestly think the economic ramifications of everything that's going on is going to have a much greater impact than anything else. Anything else, really. It really has been the pin that has popped this whole bubble. Wow. What a move. What a move. Let's jump back here and let's have a look at this article. And in case you're worrying, yes, I have my morning stein of coffee, but several people sent me these articles and this news, so I thought I need to get it out there to you all. So the Federal Reserve slashes the interest rates to zero as part of a wide-ranging emergency intervention. The Fed took the most drastic step since the 2008 financial crisis to bolster the US economy in the face of the illness. Now, do you think the RBA, do you think they've fired their shots too early? Do you think, they couldn't predict this black swan event, could they? Well, they can't. Their record of predictions is stellar, so what do we expect? The Federal Reserve made an emergency interest rate cut to zero on Sunday, a dramatic step meant to make borrowing as cheap as possible for American households and businesses as the illness brings the US economy to a near standstill. Is it going to help the economy, though, if you can borrow at low rates? What are people going to do from home? They're going to borrow, and they'll play with it on the derivatives market. I'm looking at the CFDs. I'm thinking, okay, how's gold going? When will gold spike? When will people lose confidence in the other assets and go to traditional? That's what I'm watching, and that's something everyone can do from home, from the comfort of their home. The benchmark US interest rate now in a range of 0 to 0.25%, down from a range of 1 to 1.25%. The cut effectively brings the nation's interest rate to zero, as President Trump has urged for months. The Fed has announced it is restarting quantitative easing, a central bank did in the aftermath of the Great Recession, to try to get money flowing again in markets and the broader economy. It all comes down to confidence too. The confidence of the people. If you get worried, you start saving. How many of you in the comments, how many of you have been saving? I know we've got some people that have been worrying about this for years, or some even their whole life. They've prepped for it. Got on a farm, got all this. Probably has a lot of just quality of life perks, to be honest, beyond any preparing. Living in a nice area, having access to good quality food. It's probably just sensible, even if nothing goes wrong. But how many people have been, squirreling away a little bit more? We've been targeting the mortgage, because I'm worried what will happen is the banks may go, okay, no, you need to, your house has decreased in value 50% or 40% or even 30%. You need to pay an extra, such and such off your mortgage right now. You've got 60 days to come up with 3 years worth of payments. That's something I'm worried about might happen. That's what I'm preparing for. The actions come as the economy was hurtling towards a recession, as the illness outbreak shut down wide swaths of US society. The Fed vowed Sunday to use its full range of tools to support the economy and smooth functioning of markets. Its full range of tools. Printing money and buying shit that they buy with that printed money. That's pretty much their full range of tools. And then manipulating the interest rate. How often are people going to fall for it? In the coming months, the Fed will purchase at least $700 billion more in bonds as part of its new QE. So all the people who were buying in bonds expecting the Fed to come in there, looks like they were right. The majority of that, at least $500 billion, will be US Treasury bonds. The rest will be mortgage-backed securities. The ultra-low interest rates are expected to remain until the US economy recovers from the illness downturn. Are they ever going to get out of this? Is the world going to enter a decade or a couple of decades like Japan? It'll be interesting to see. It's definitely, this century, I think, is going to be a different century to the last. The Fed expects to maintain this target rate until it is confident that the economy has weathered recent events, the central bank wrote in a statement released Sunday evening. Layoffs have already begun across the country as large and small businesses see a dramatic decrease in sales. The Dow Jones Industrial Average remained in bear market territory after the swiftest 20% plunge in US stock market history. See, this is the thing, guys. This is even more dramatic than the Great Depression. The Fed's actions Sunday come on the heels of an emergency interest rate cut on March 3rd and a large $1.5 trillion injection into the bond markets last week to ensure sufficient liquidity for normal market operations. All but one Fed leader voted in favor of Sunday's extraordinary move. Cleveland Fed President Loretta Masters preferred to keep interest rates slightly higher, but she was outvoted. Concerns are rising that the Fed has few tools left in its emergency bag to aid the economy. Fed Chair Powell has now used his two biggest actions, cutting interest rates to zero and unleashing quantitative easing again. The Fed could possibly do more QE or go to negative interest rates, but that has never been done before in the US, and Powell has expressed his strong desire to try to avoid that. Do you think Australia will head to a negative interest rate? In some ways that would be quite quite satisfying. All those politicians for the cash ban who were saying it's never going to happen, it's all conspiracy theories. Whoa, shoot, I'm just looking at gold right now. It has just jumped 20 bucks. 20 bucks on open. Yep, okay. Sorry, I literally just jumped in the market. We'll see how it goes. Shoot. Shoot, this is what happens when I'm recording, guys. I missed an opportunity there. Well, oh, it's going nuts. It's going nuts. So there you go, guys. It's what, at 1560 right now at the moment. Back to the article. I'm getting distracted. Oh, it's all over the place. It's all over the place. We'll have to see. Wall Street has widely expected the Fed to cut interest rates to zero this week, but the central bank moved even faster than most expected. There is some concern that such a swift move will cause more panic because it signals how worried the central bank is about the economy and the markets. Well, yes. Yeah, we'll have a look here. Let's jump over to this, and I'll just refresh this data for the S&P 500. Let's go to 1 day. It's that jumped up 26, so down from 27. This is the 1 minute chart, the Nasdaq. There you go, down from 7,000. We'll have to see. We'll have to see. This is interesting watching, guys. Interesting watching. So the Fed and other central banks have gone all out to aid the world economy today, writes Chris Rumke, chief financial economist at MUFG Bank. Sometimes the massive Fed interventions have generated even more panic selling in the market, as it shows the severity and concern of Fed officials of just how bad the risks are in the economy. Trump has been pestering the Fed for days to do more to prop up markets and try to prevent the economy from falling into a recession. Lower interest rates are unlikely to do much to boost the economy if people are staying in their homes because of quarantine fears of catching the illness. Many economists have pointed out. Exactly. So what benefit is the cash handouts going to have? Most economists have urged Congress and the White House to do a major stimulus package to protect workers and businesses from collapse. On Saturday, the House passed billions of dollars of additional funding for healthcare and workers who must stay home. In addition to cutting interest rates, Sunday, the Fed Bank announced it a joint action with other central banks around the world. The Fed is extending US dollar swap lines to other key nations, including Japan, England, Europe, Canada, and Switzerland, to ensure those nations have enough dollar reserves on hand. This is another move straight out of the Fed's 2008 emergency playbook. Treasury Secretary Steve Mnuchin said Sunday that he is in daily conversation with Fed Chair Jeremy Powell, and the two are working hand in hand. So there you have it, guys. A crazy rate cut. And, I mean, there you go. Look at this. Nasdaq shooting down. What's the Forex doing? Australian dollar up 62 cents. The US dollar is taking a hit everywhere. Well, it's going to be another interesting day watching the markets. Guys, let me know how you all go. We'll have to see what this will do and how will Australia respond. Please let me know your thoughts and opinions in the comments below. Like, share, and subscribe. If you're a fan of the channel, please get the videos out there, help the channel grow. You can support us a few ways. Join the channel on Patreon or here on YouTube for a small monthly fee. You can buy our merch available from HeiseSays. We also have affiliate links at Amazon or eBay for your consumer purchases, Independent Reserve and Kucoin for the crypto traders out there, and finally PayPal for those of you that want to support us that way. Thank you all very much. Take care, and I'll see you later today. Bye for now.